Rumors are swirling in the financial world, whispers of a bold move by former President Donald Trump. Could Trump, a man known for his unconventional approaches, be considering the inclusion of Bitcoin as a strategic reserve asset for the United States? This proposition seems almost paradoxical given Trump's previously expressed skepticism towards cryptocurrencies. During his presidency, Trump was openly critical of Bitcoin and its digital counterparts, labeling them as not money and expressing concerns about their potential use in illicit activities. This stance aligned with the cautious approach adopted by many world leaders at the time, who grappled with the nascent and often volatile nature of cryptocurrencies. However, recent events suggest a potential shift in Trump's perspective. Some speculate that his recent foray into the digital realm with the launch of his own social media platform, Truth Social, may have softened his stance on digital assets. Could this be a sign of a broader change in Trump's thinking, a recognition of the growing influence and potential of cryptocurrencies, particularly Bitcoin? Only time will tell if these rumors hold weight, but the implications of such a move could be significant, sending ripples throughout the global financial system.
To understand the potential impact of Bitcoin as a reserve asset, it's crucial to first grasp the concept of reserve assets and their historical evolution. Reserve assets are essentially safe haven assets held by central banks and other financial institutions to ensure financial stability and facilitate international transactions. Gold, with its enduring value and limited supply, reigned supreme as the primary reserve asset for centuries. Nations accumulated vast gold reserves, backing their currencies and using it to settle international debts. This system, known as the gold standard, provided a degree of stability, but was ultimately constrained by the limitations of physical gold. The 20th century witnessed a seismic shift in the global financial order, with the US dollar emerging as the dominant reserve currency. Backed by the world's largest economy and the strength of the US military, the dollar became the linchpin of international trade and finance. This system, while seemingly robust, is not without its vulnerabilities. The reliance on a single national currency as the primary reserve asset exposes the global economy to the vagaries of US economic policies and geopolitical maneuvering.
The potential inclusion of Bitcoin as a US reserve asset has ignited fervent debate within financial circles, with proponents and skeptics alike presenting compelling arguments. Advocates highlight Bitcoin's unique characteristics as potentially beneficial to the existing reserve system. Bitcoin, often dubbed digital gold, shares some key attributes with its physical counterpart, namely its limited supply and decentralized nature. Its finite supply, capped at 21 million coins, provides a hedge against inflation, a concern that has plagued fiat currencies in recent times. Moreover, Bitcoin's decentralized structure, operating independently of any government or central bank, could offer a level of protection against geopolitical risks and the potential for manipulation that comes with centralized control. However, critics point to Bitcoin's notorious volatility as a major obstacle to its adoption as a reserve asset. The wild price swings that have characterized Bitcoin's history raise concerns about its suitability as a stable store of value. Additionally, the relative novelty of Bitcoin and the lack of a comprehensive regulatory framework present challenges for institutional investors accustomed to operating within well-defined rules. Section 4. A digital power play: geopolitical implications of a Bitcoin reserve. The potential for the United States to embrace Bitcoin as a reserve asset extends far beyond the realm of finance, carrying significant geopolitical implications. Such a move could be interpreted as a strategic maneuver by the United States to maintain its global dominance in the face of rising economic powers, particularly China. China has made significant strides in developing its own digital currency, the digital yuan, and has been actively promoting its use in international transactions. The adoption of Bitcoin as a reserve asset by the United States could counter China's ambitions and reinforce the dollar's preeminence in the digital age. Furthermore, it could potentially diminish the influence of other nations that have traditionally relied on large US dollar reserves as a source of economic leverage. The decentralized nature of Bitcoin could empower nations seeking to reduce their dependence on the US dollar and carve out a more independent path in the global financial system. However, such a move could also spark a new era of financial competition, prompting other nations to diversify their own reserve holdings and explore alternative reserve assets, potentially leading to a fragmentation of the global financial system. Section 5. The devil is in the details, technical challenges of a Bitcoin reserve. While the potential benefits and geopolitical implications of a Bitcoin reserve are intriguing, the practical challenges of implementation cannot be overlooked. One of the primary hurdles lies in the technical aspects of storing and securing vast sums of Bitcoin on a national scale. Unlike traditional assets held in physical vaults, Bitcoin exists solely in the digital realm, requiring robust cybersecurity measures to prevent theft or loss. The decentralized nature of Bitcoin, while a strength in terms of resilience against censorship, also presents challenges for custody and management. Central banks accustomed to centralized control over their reserves would need to adapt to the decentralized nature of Bitcoin, potentially relying on specialized custodians or developing their own secure storage solutions. Moreover, the scalability of Bitcoin's blockchain, its underlying transaction ledger, remains a topic of debate. The current capacity of the Bitcoin network to handle a significant increase in transaction volume, as would be required for it to function effectively as a reserve asset, is uncertain and would likely require further development and innovation. Section 6. Navigating the Labyrinth, the Path to Bitcoin, Becoming a U.S. Reserve Asset. The process of incorporating Bitcoin into the U.S. reserve asset portfolio is a complex and multifaceted one, involving a confluence of governmental bodies and intricate procedures. The U.S. Treasury Department, responsible for managing the nation's finances, would play a pivotal role in initiating and overseeing this process. The Treasury would need to conduct a thorough assessment of Bitcoin's suitability as a reserve asset, considering factors such as its volatility, security, and potential impact on the financial system. Following the Treasury's assessment, Congress would need to weigh in, potentially enacting legislation to formally recognize Bitcoin as a reserve asset and allocate funds for its acquisition. The Federal Reserve, as the nation's central bank, would be tasked with the practical aspects of acquiring and managing Bitcoin reserves. This would likely involve establishing clear guidelines for custody, security, and transactions, potentially requiring collaboration with specialized custodians or the development of in-house expertise. The entire process, from initial assessment to final implementation, would likely span several years, requiring careful deliberation, public discourse, and potentially significant adjustments to existing financial regulations and infrastructure. Section 7. Cboe's Ethereum ETFs, a new dawn for institutional crypto adoption. In a move that could further legitimize the cryptocurrency space, Cboe, a major U.S. exchange operator, has announced its intention to launch trading for 5 Ethereum ETFs on July 23. This development marks a significant step towards wider institutional adoption of cryptocurrencies, potentially paving the way for greater mainstream acceptance. Ethereum, the second-largest cryptocurrency by market capitalization, has gained traction as a platform for decentralized applications and smart contracts, expanding the potential use cases of blockchain technology beyond just digital currency. The introduction of Ethereum ETFs would provide institutional investors with a regulated and more accessible avenue to gain exposure to Ethereum's price movements without directly holding the underlying asset. This could potentially attract significant capital inflows into the Ethereum market, driving up its value and further solidifying its position within the financial ecosystem. Moreover, the approval and launch of Ethereum ETFs could serve as a catalyst for the approval of other cryptocurrency-related financial products, such as Bitcoin ETFs, which have faced regulatory hurdles in the past. This could usher in a new era of institutional participation in the crypto market, potentially leading to greater liquidity, stability, and mainstream acceptance. Thanks for watching. If you're interested in how you can use your cryptocurrency for everyday transactions, check out my dedicated video on Re.Pay. Re.Pay is a versatile crypto payment platform that lets you spend your digital assets just like fiat currency with a single transaction limit of up to $100,000 USD. Learn more about how to get started with Re.Pay's virtual and physical cards, their compatibility with Apple Pay and Google Pay, and the robust security measures they have in place. Click the link in the description to watch now.